Hello and welcome to this August 5th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are taking a look at the Spiders, ticker symbol SPY. This is an ETF that tracks the S&P 500. I wanted to point out as we get closer to the Friday employment report how big technically the level is where we're currently sitting. You can see the Spiders came up to 112.97 at the close on Wednesday. The major candle body resistance resides at 113.12. So literally we came up and closed almost right on that resistance level. Intraday, for those of you who like to follow the intraday action, intraday resistance is up at 113.20. And today's high was 113.11, literally right at that resistance, the closing resistance level. So 113.12 is the level that we're watching. The thing that's interesting here is that in the short term, the market looks very bullish. I mean, we've got the MACD pointing straight up above the center line. That's very bullish. Normally during uptrends, when you come back and you test the 20-period moving average like we did here, and it holds, that's generally bullish action as well. So everything looks good here in the near term. A couple of problem areas. Number one, you can see the volume really not supporting this move to the upside. The last couple of days, especially on Wednesday, you can see it was one of the lighter volume days of the year, certainly one of the lightest over the last 3 or 4 months as we've been mired in this downtrend. Now, August is known for light volume days because there are a lot of vacations being taken. So it's, kind of a difficult call as to what kind of volume we need to make the breakout, but obviously more volume than what we saw on Wednesday at 144 million shares. We'd like to see more volume than that. If we can get up over 200 million, that obviously would be much better. The second thing that I really want to point out here that I think the market's going to need in order to make this breakout is we need to see the financial group and breaking out. And down here we've got the Dow Jones U.S. Financial Index that closed at 268.12. Take a look back in May when we made this first big drop off of the April highs. You can see we came down and we didn't have a close below 270. It was right around the 270, 271 area. We bounced back up in mid-May to almost 290, and then we came back down and we took out this 270 to 271 area. Notice all of the failed attempts coming back up on the financials at 270 to 271. We finished on Wednesday at 268.12. So if the Spiders can make this breakout, get a little volume coming in, and it's supported by some of the groups that tend to lead the market to the upside, like the financials, then I think things are starting to look much more bullishly in the near term. But if this market tries to break out without leadership from the financials, and the financials cannot get through this resistance level, then to me it's a big red flag, and we're going to want to be careful to make sure we see that breakout before we get too aggressive on the long side. So again, with the employment report coming up on Friday, I think this is going to be very big technically for the market to see if the major indices can clear some significant price hurdles, and also some of the sectors that tend to lead the market to the upside, they too need to climb above some critical levels as well. So let's keep in mind these various battles that will be taking place over the next couple of days and make sure that we get some confirmation on any move higher. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.